Hello everyone, this is John from Data Finance. Welcome back to our channel. We are with you on 8th of December Intraday Analysis. We will cover some news before we start our charts. Alright, we have heard about some recent news about this new Omicron. Pfizer yesterday said that current vaccines are less effective on our first findings. They are still searching about the cases because it's still too early to judge, but the findings show that the mutation of this variant is compared to Delta variant is more complex because it's also imitating our body immune system. So the antibodies are not happening that fast. So you are still protected when you are vaccinated, but less protected if you are at the end of your vaccination period. What's the vaccination period? For example, you had your vaccination at June or July, so 6 months. At the end of 6 months, your vaccination protection is getting at the lowest level. So if you catch that virus at that period, so you will be really vulnerable to these variants. So everybody is suggesting me as well, please get your shots and booster shots so get protected with from these virus. Otherwise we will see more severe problems in these virus. And yeah, that was the news. And after that news, we have seen the stop in the markets because they were trying to recover, but there was no decreasing that one. Actually, kind of pumping the market from low levels. Everybody just said, all right, it's really low already, so why not? We are not buying the stocks and oil right now. So a rally has started and we have seen highs, but then people just remembered that, yeah, we have bought this, but there are problems like Evergrande, like Omicron. So these thing was really the big news, stopping them to buy and then just waiting. And right now we see some correction of this rally because after every big rally we see a correction, and let's say like a 5 point goes up, 1-2 point goes down, and just a correction of that rally. And right now in the market we see this. All right, so let's start with our chart. Right now, as you can see here, we are on US oil chart, and US oil has risen until to $72 per barrel and started its accumulation period, and now it's on the decline and testing 70.77 levels. So that's a critical support. If it just stretch that support level, we can see below that area. And today's crude oil data is imported in US. After that data, we may see a bigger sell-off or a bigger buy rally in oil prices. And Biden administration is trying to do everything is possible, and even they are saying that we may open legal issues to those companies who is profiting these problems, because right now this supply chain problem is a critical problem and some companies are just benefiting from these crisis. It's not only like a benefiting like buying or something, like not like that, it's like stockpiling. They have it like US shale drillers or that kind of people, they have enough potential to curb the prices, but they choose not to do that, and they choose make more money with small investments. That's why in US there are some legal talks right now. So that's why they want to make big brothers angry. So we may see stockpiles going up in US, and this may lead another decline in oil market. So as you can see on the chart, critical levels is 70.77 is a support line and 73.57 is a resistance line, and we may see some accumulation between this period because the countries like who are like the countries that are consuming oil wants less oil prices, but the producing countries also want higher prices. Even Russia is thinking of raising oil prices, so they are bullish on these prices. Compared to $85, we are $15 less, but we may be 10 or another $15 less as well in oil prices. This is what European and US countries and US is thinking. Also China. All right, let's look at gold prices. What's happening there?
You are ready to win with us. GAN Markets.
All right, the prices in gold is rising because of the fear of Russia and Ukraine conflict. Last night, Biden and Vladimir Putin made a video conference, and after the conference, the speeches by US and Russia said right now they have made some agreement, and then they will not get into Russia, will not get into Ukraine, and US stated that if something happens like this, there will be severe consequences for Russia. They will start with sanctions, and then they will do whatever needed to protect European countries from these kind of invades, because they say, all right, it's over, and then the things are not the same like Crimea moments, because in Crimea, after the annexation of that one, and European countries and US has made some sanctions, but it didn't work. Russia did what he's asking for, and right now they are just thinking the same thing. Donetsk region in Ukraine, and US is telling that this time it's different. It's not the same country. It's not the same attitude. They will face tough results, and so the tension is just stretching, and this is making gold prices higher levels. Normally, on the circumstances of current situation, gold should go down. Reason is 10-year bonds are rising. On fixed income, US 10-year bonds rising, gold is declining, but the current tensions between countries are fueling the rise of gold. If we just hear more and more about this story, we will see higher levels of gold to protect, because in war times, in difficult times, gold is always safe haven for countries and for investors. That's why we see a rise in the price of gold. And the first level to be tested as a resistance is 1799, and level to be tested as a support line is 1773 is critical. So you can just keep on watching the news, and if you see some more critical speeches, then you can buy, and then you can just take profit. If just relaxation on these issues, then you may see some sell-off in the market, and then you can just sell and take profit. All right, let's look at our last chart. What's happening there? Our last chart is euro dollar. As you can see on the chart, not much happening in euro dollar, because European economy is trying to recover, but slower than US economy. So the balance is just happening uh, in the good mood of US. So it's important in the advantage of US, because dollar index is keeping rising, because the Fed saying that inflation is happening so fast, and then it's not transitory anymore, and we may do, like, we not may do, actually they say we should do tapering faster, and we should think about rate hikes faster than planned. This is making dollar index stronger against euro, against GBP, against Japanese yen, and some other currency pairs. So we see limited increases in euro dollar, but mostly falls in every attempt on high levels. As you can see here, it's just getting limited, and when it starts to fall, we see further declines in euro dollar. Right now it is testing the support level again, 1.12 area. It is being tested again, and we may see more drops, and if we see a stronger dollar index, as I said. And for Friday US inflation data, we may see a spike on upside for a short time, but for long term it will make Fed more hawkish. Higher inflation will be more hawkish, and this hawkish scenario will make tapering faster, and dollar index will go higher, and euro dollar will just be on decline again, because European Central Bank is not thinking about the tapering in 2022, and at least for now, because Fed also was not thinking, but they have changed their speech, their attitude. We may see the same happening in European Central Bank as well. All right, thank you so much for listening, and we will be together on more names and more charts in afternoon analysis. As I said, this afternoon we will just get US crude oil stocks data, and that's important, and you can make money just following those data. Have a nice day. Bye.